UK markets are losing faith. Can Rachel Reeves' budget win them back? The moment of truth is finally here. On Wednesday, Chancellor Rachel Reeves will unveil her budget and markets will deliver their verdict. Months of speculation have taken a toll. Hiring has stalled, investors are fleeing out of the FTSE and confidence is hanging by threads. This budget is supposed to bring clarity, but will it steady nerves or deepen the doubts? George Godber is a UK fund manager at Polar Capital. So George, Reeves needs to raise roughly £30 billion to plug the fiscal gap. Can it be realistically to be done?
Yes, it can. I think that be a combination of freezing of the income tax bans. It feels like there'll be something around the pension market. Difficult to sort of say exactly what, but some alteration of the allowance is there. You could get something sectorally, possibly, banks that's been speculated, and an increase in council tax. But yes, she can raise the 30 billion needed. But do note, I'm talking about tax rises here. I think there's no indication that this will be plugged by any form of spending restraint from the government. So if you raise taxes, you have to have a negative impact on growth. There's no free trade, economic trade-offs here.
Well, the bond markets will quickly pass judgment, but will traders buy into a budget built on small technical tax changes?
I think you've got four key questions. The first, as I've just said, look, what's the impact on growth? Importantly, will this budget lead to inflation? The last one really did. And then, of course, importantly, will this be seen as credible? And then what will that lead to issuance that the bond market has to absorb? And look, if all of those things are fine, the bond market will move on very quickly and say it's fine. If it's, I would therefore encourage people to focus on two things. Is this a sort of exercise of kicking the can down down the road? Is it going to lead to some big spending splurge that leads to a sort of huge level of issuance? But again, I keep coming back to, is this going to be seen as inflationary? So look, she can land this. It's a relatively narrow pathway to land. But yes, it can be landed and the market can accept it. But it does depend on answering those four questions that I talked about.
Well, CEOs are already warning that they will pull back investments if this budget loads more costs onto firms. How real is that threat and what would it mean for the FTSE?
I think in your initial intro, your spiel, you talked about the effect of the budget as we're running up to this. I mean, within the domestic economy, this budget has had a very negative impact in the months and the weeks running up to it because they've scared the living daylights out of consumers. They've certainly impacted smaller businesses. And, at a broad level, do I think this budget is going to deliver what businesses want, which is lower energy costs, deregulation, lower taxes? No. But at a market level, you've seen very significant underperformance of the 250 relative to the 100 into this. The negativity is priced in. Therefore, there's a big opportunity for an unwind there, especially probably with the rate sensitive parts of the market. So actually, I would probably expect more likely you see a relief bounce after the budget. Masses of unknowns right now. Masses and masses. Markets hate unknowns. At 1 o'clock on Wednesday, we're going to have more knowns, and that will be easier for the market to deal with.
Let's turn to the Bank of England. How does it read a moment like this? Is the door wide open for a December cut?
Look, I think that's such an important question you've answered there, and the answer should be really clear. This growth impact, the budget should be deflationary. This should accelerate Bank of England cuts. So why is that not an absolute racing certainty? The last budget led to a significant amount of policy inflation. Energy prices, when they whacked up the national insurance costs, that affected the cost base of all businesses. They put through some very significant taxes, especially within food and packaging. And that basically led to upward pressure on inflation. So if you say to me that this budget isn't going to be inflationary, this will nail on that December rate cut and accelerate cuts into next year. I guess one policy to flag that's been muted a little bit, there's been talk about, cutting VAT on energy bills. That alone could lead to a sort of downside pressure for inflation forecast into next year. So that we should be talking about accelerated rate cuts. But I've got a big if that depends on whether the policy matches the actions on inflation in the budget.
So finally, George, sterling traders seem unwilling to take big directional bets right now. Is the downside risk already priced in?
Look, sterling's been pretty stable. That's as much a function of a weaker dollar, right? I mean, that's always the way with, when you're talking about. So it's been notably weaker against the euro in recent months as the budget speculation's been high. If she makes a total hash of this, is it all the risk priced into sterling? No, absolutely not. I'd also sort of spin around the other way. The fact that people talk about the budget being a trust type moment, and that's not likely that we get a dislocation. You should see some form of a relief bounce for sterling assets, and I'd include domestic equities in there, some of the more domestic areas of the market, such as house builders, real estates, etc. But it comes back to everything we've touched on today. Is this going to be a budget that's sort of delivered in a way that's acceptable to the bond market? And if that's so, you'll get that relief bounce in sterling. If it's not, then you won't.
That was George Godber from Polar Capital. Don't forget, you can watch more videos on Reuters.com.